Good afternoon, everyone. Welcome to a confidence trick that works most of the time. My name is Philip Auger. I'm chairing the panel. And I thought that we would begin by actually taking three stories, three examples of occasions when the confidence trick very, very clearly didn't work. And they're all drawn from the great financial crisis of 2008. And to help us through this, we have authors of three books that are so brilliant that I really wish I'd written them myself. We have Jared Bibler, whose book, Iceland's Secret, the title tells the story. Ian Fraser, whose wonderful book on RBS, Shredded. Some people think that that the title of the book is the reason that RBS had to change their name to NatWest. And then finally, the author of probably the definitive work on the HBOS scandal, Ray Pearman. So we'll start off by telling those stories. I'll then ask a few questions. We might have a discussion amongst the panel. And then for the second half, I'd love to open it up to questions from the audience, if everyone is in agreement with that. So let's kick off, please, with the first of the stories, Iceland's Secret. Jared.
Thank you. Thanks so much for having me. Thanks for coming. The Iceland story, in a nutshell, is a story of a very small country. In the 90s, we had about 270,000 people only. We had three very small, sleepy banks. One of them was called Búnaðarbanki, that means the agriculture bank. Another one was called Landsbanki, that means the bank of the land, and so on. And these banks, they kind of were being privatized at a time when interest rates around the world were very low, tying back to Mr. Chancellor's talk last night. Interest rates were very low, and investors around the world were looking for high-yielding paper that they could buy. And these banks realized if we can issue debt on global debt markets, we can grow, and we can give loans to our friends, which was kind of how the Icelandic miracle started, was that the banks, which were kind of not very transparently, or you could even say sloppily privatized by the government, in terms of handing banks out to politically connected individuals. And then those individuals running the banks were able to give loans to themselves and their friends. And it was cited as the Icelandic miracle. I mean, we had, along with floating of the Icelandic currency, which was in 2002, I believe, we suddenly had more money than we knew what to do with flowing into the country. And the banks were able to double in size every year for several years. So they grew actually by the end to be the size of Enron each. And the confidence trick that works is that at first they were able to, and as we know, generally banks print money when they make loans. And making loans to their friends and family to do various business deals was how the banks began their life. But they weren't great at banking. They weren't great at choosing loans. And so those loans were already in trouble by, let's say, 2002, 2003. And the only way to escape the bad loans that they had made the year before was to grow the bank bigger and hope that the next year things were better. And so that was part. I think that was the fuel for the super fast growth. My book, Iceland's Secret, is about a real con or a real fraud that the banks perpetrated at the same time. Because in order to borrow from the global debt markets, they needed to show a good share price. And within a few years of privatization, there was almost no demand for their shares. People in Iceland had bought them in the privatizations and were holding them, and the pension funds had bought them and were holding them. The daily volume was very low, and even in 2001, I think 2002, 2003, it started to slide, the share prices. And this is when the banks realized, hey, we don't have to let the shares slide. We can just buy them. We have enough money coming in from the Germans and other lenders. We have enough cash. We can buy our shares back. We won't tell anybody. And so they did. And they did this for years. And this enabled them to borrow yet more and more because their shares are actually still going up. And this was, I lived there through all of this, and I lived through the inevitable collapse where we lost our house and everything else. But that was the confidence trick. of Iceland.
Lovely. Let's just park that for the moment. I can't help but think there was a famous case quite after the great financial crisis when the late Queen when it was being shown around, I think, the Bank of England, and the issue was being explained to her, and she said, well, why did no one see this coming? Mm-hmm. But we'll come on to that in a minute. But a scary story, which, and as you tell it, it brings it right back. Ian, take us a bit closer to home.
Well, I mean, with Royal Bank of Scotland, there's a long history. It was founded in 1727 as a bulwark against Jacobitism, because the rival Bank of Scotland was banking the Jacobites, and they needed an alternative. The Whig establishment of the day needed an alternative bank. But that wasn't really a confidence trick. I mean, it's hard to single out just one confidence trick with RBS, but I think the biggest one, by the way, the bank is now called NatWest. It changed its name to, the group changed its name to NatWest Group PLC in July 2020 when Alison Rose was the chief exec. So that's why it's RBS NatWest. But I suppose the biggest confidence trick was probably the takeover of NatWest, a bank 3 or 4 times the size of the Royal Bank of Scotland. And that happened between November 1999 and March 2000. And Fred Goodwin and George Mathewson, who were then the chief executive and the deputy chief executive, sorry, the other way around. George Mathewson was the chief executive, and Fred Goodwin had been recently appointed as deputy chief executive, managed to persuade the investors in the City of London that RBS would be a better owner for NatWest than the existing management control or standalone entity, or than Bank of Scotland, which was also bidding for NatWest at that time. There was a very fierce takeover battle, and RBS won it through a lot of, shoe leather on the pavements of the City of London, going around all the investment management houses, and persuading them that Fred Goodwin was God's gift to banking, and would be the best, could increase the value of the NatWest shareholders' shares more than either of the other 2 options. And arguably, this was a contract, because what happened after that was that Fred Goodwin was revered in the financial media, at Harvard Business School, by investment analysts, city analysts. He had them virtually eating out of his hand. They believed he was God's gift to banking, because he managed to pull off what was seen at the time as an amazing integration of crunching together 2 banks and sacking 18,000 people, amalgamating data centers, and ruthlessly cutting costs to try and make this merger pay. But he wasn't actually really God's good gift to banking. The trouble was, it went to his head, and he believed he could repeat this trick 30 times over the next 8 years, because he became chief executive in March 2000. And he believed he could carry off the same trick up to 30 times by overpaying for rival banks or financial institutions. And one of the biggest ones was called Charter One. A really big one was ABN AMRO, which was in 2007. Churchill Insurance, first active in Ireland. And a lot of acquisitions, but gradually the magic waned, and his ethos, which was, it doesn't matter if you overpay for an acquisition. You can if you're as good at integration as I am, we'll make it pay. But if you look at this graph here, it's up towards the first peak of 2002. That's when the doubts began to set in. People thought, well, maybe he isn't. Maybe the emperor has no clothes. Maybe he is a con artist. And he somehow managed to rebuild up to the point of buying ABN AMRO in 2007. But then, I suppose, the magic failed, and people realized that he wasn't. And the board was weak. I mean, this is something we can come on to, perhaps. Have Have I overstepped my time?
No, please carry on. Because I think you should tell us actually what happened to cause the precipitous fall.
Right, well there's a critical moment came in October 2007 when, despite people warning him, and despite a lot of senior people warning him, he went ahead with the takeover of ABN AMRO. And the regulator in Holland decided to make his life difficult by forcing RBS to hold the whole of ABN AMRO's balance sheet on the RBS balance sheet for a certain period after that takeover. He thought he could palm off it was a carve-up takeover, so part of it was going to Santander, part of it was going to Fortis, which is now dead, and part of it, which was the worst part, the investment banking part, was going to RBS. But he was forced to take the whole of that onto his balance sheet, and they couldn't fund it anymore because he paid in cash for his share, or RBS paid in cash for their share, and because of the credit crisis, which he should have been aware of because it started in July 2007, everyone else in financial markets knew the credit crisis had started in July, August 2007. Fred Goodwin seemed completely oblivious to that. He was so obsessed with buying ABN AMRO. They were unable to fund themselves. And one thing, they actually, in the old days, say a wholesale depositor would put down 100 million for a short period with RBS and 100 million with ABN AMRO. They're two large European banks. But once they came together, the same wholesale depositor said, no, that we can't concentrate our risk, so we're going to only give 150, so 25% less, to park, with this institution. So that was one of the reasons they were struggling to fund themselves.
So was this a sort of very high-level bank run, or was it that they simply couldn't roll over their debt as debt matured? Or was it a bit of both?
A bit of both. There were large corporates which were removing their deposits, and I think 45 billion was removed between Lehman Brothers collapse on the 7th of October when RBS share price collapsed. Mm-hmm. But there was also the wholesale funding going on at the same time. So basically they were dead in the water, really, the moment Lehman Brothers failed. And actually people who met them on the 16th of September knew that to be the case.
But in the early days, it's a bit like Iceland as well. I mean, you have European bond investors who are taken in by the story. You have hard-headed investment managers in the City of London who are taken in by Fred Goodwin. It's the same issue. What was it like at HBOS, Ray?
Let me start by telling you what HBOS was, because it's largely forgotten now, and frankly, it deserves to be forgotten. It was formed in the year 2000 by the merger of Bank of Scotland, hence the BOS bit here. Bank of Scotland was already 30 years old when the Royal Bank was founded. In the year 2000, it had previously, in the last 5 years, celebrated 300 years of being a bank. It had a fantastic reputation, both among its customers and in the City of London. It was, at the same time, incredibly prudent. It was a byword for trustworthiness. Its chief executive was widely admired, and it had increased its dividend year on year over 20 years.
Thanks.
It bid against Royal Bank for NatWest and failed. And on the rebound of that, it went into a merger with Halifax, which had been a building society not very long before, not quite as old as Bank of Scotland, but well over 100 years old, and again revered as an incredibly prudent and solid organisation. It was the biggest mortgage lender in the UK, and its loan-to-value ratio was very low. That is, its debt was very well covered by the value of the properties in which it had lent. So you had these two prudent, safe institutions merging together in the year 2000. And in Philip's words, what possibly could go wrong? Well, what went wrong was that the prudent management of these two old firms was no longer in charge. There was a bright, young, thrusting management led by a chairman who had no banking experience, The chief executive had no banking experience. The head of sales had no banking experience. To go to the old joke, what is the difference between the chief executive of HBOS, the chief executive of RBS, and Terry Wogan? Terry Wogan had a banking qualification. And HBOS, from the beginning, set itself up as the challenger bank. It was smaller than the big four London banks, but it aspired to take them on at their own game and to grow incredibly fast and to be revered as one of the big five banks. So from the beginning, it went aggressively for sales. It went aggressively for sales in all parts of the market. It went aggressively for mortgage sales. It was already the biggest mortgage lender in the UK. It went aggressively for mortgage sales against Northern Rock, for example, which notoriously was offering 125% mortgages. That particular confidence trick only works if property values continue to go up. HBOS competed for sales in personal loans, and it competed for sales in corporate debt, where it had a particular specialism in small businesses, technology businesses, and property businesses. And in particular, it made a lot of very large, very risky property loans. Unfortunately, the beginning of the 21st century, it did quite well out of those. It notoriously funded Philip Green in his various acquisitions, which got bigger and bigger and bigger. And when Philip Green paid himself a dividend of £1 billion, I'm sorry, I'll correct that. He paid his wife a dividend of £1 billion. Bank of Scotland HBOS as the junior equity holder in that company got 100 million. It hadn't lent much more than that. So, things seemed to go extraordinarily well. But the emphasis on sales meant that other things, like risk, had to take second place. And Bank of Scotland had a risk department. I keep saying Bank of Scotland, I mean HBOS, but Bank of Scotland was the name which they used in the corporate market. There was a risk department which was separate and subordinate to the sales operation. And so sales managers, particularly in corporate lending, would do a deal, would shunt it off to the risk department and ask them to rubber stamp it. And the risk department started to get these things build up. There was a backlog. Senior management was saying, why aren't we booking the profits on this deal? Oh, because it's still in the risk department. So they put big pressure on the risk department to wave things through. In the beginning of 2007, 2008, particularly after Northern Rock went bust, and there was, if you remember, a classic bank run in Northern Rock with people queuing up outside the branches to take their money out. Rumours started to swirl about HBOS. Was it quite as solid as it had made out? And in particular, Jared was talking about the directors of the Icelandic banks buying their own shares. Well, in Britain you could do that legally, so HBOS had been buying back its shares over the first 5 or 6 years of the new millennium in order to inflate the earnings per share, because if you have less equity and the same earnings, then your earnings per share go up. But what that means is you have less capital to fall back on. We'll maybe get to this part of the confidence trick later, because banks are supposed to keep a certain amount of capital against losses. and HBOS was shrinking its capital while it was increasing its assets, the loans that it made. Finally, in 2008, the market started to get whiffs that HBOS was not a very stable bet, and there was a couple of runs on the shares, and in particular there was short selling. The bank immediately cried foul. So this is, as the First Minister of Scotland at the time said, spivs and speculators unfairly trying to make a profit by talking this bank down. The Financial Services Authority instituted an investigation which said, yes, hedge funds particularly have been dumping the shares and buying and short selling the shares, but there is no indication of collusion. There is no indication of spreading false rumours about the bank. We can only conclude that they're acting rationally, which they were, getting rid of the shares. Throughout 2008, the share price declined steadily. And then in the autumn, in October 2008, and I've told this story in the preface to my book on the collapse of HBOS, I was at a business lunch in Edinburgh, a business dinner, sorry, and it was a black tie dinner. I can't remember what it was. It could be the CBI, it could be the Chambers of Commerce, could be a couple of others. All black tie dinners merge into one after a while. And I was sitting next to a man who ran a commercial property company. I didn't know him. He was going on about his business, and I half turned off. I nodded, I smiled, I tried not to be rude, but frankly, I was looking around the room thinking, is there anyone more interesting I can talk to? When he said something that absolutely caught my attention, he said, I moved 30 million out of Bank of Scotland today. I said, you did what? We all knew that HBOS was in trouble, but it hadn't occurred to me it might go down and take our money with it. Now, I personally didn't have much worth talking about in HBOS, but I was chair of a small business, and we had $500,000 deposited with HBOS, and frankly, that was keeping us safe through the recession. So the following morning, crack of dawn, I phoned the chief executive. I said, get to the bank, get the money out, put it in HSBC, and phone me when you've done it. Time went past, no phone call. Time went past, I tried to call him, no, he's out. Finally, at the end of the day, he called me. I said, did you get the money out? He said, yes, I did, yeah, I did that as soon as you told me. And did you get it into HSBC? He said, no. He said, I tried on the phone, but the phones were constantly engaged. I went down to the branch in Princes Street, Edinburgh. There was a huge queue of people opening new accounts. He said, I couldn't get it in there. But he said, don't worry, it's safe. I put it in Royal Bank of Scotland. But what we now know, after the collapse of HBOS, which came very soon after that, is that 30 billion left HBOS within 4 or 5 days in October in a silent bank run. It wasn't people queuing up outside the branch. It was people like us transferring their money electronically to other banks. And that was one of the contributory factors that brought down HBOS with just historically large losses. There are two things, I won't go on much longer, but there are two things about HBOS. Royal Bank had the distinction of being the biggest absolute loss in British banking history, but HBOS had the distinction of being the biggest percentage loss. It lost a larger percentage of its loan book than any other bank in history, and a percentage much larger than the capital it held against its bad debt.
Lovely. Thank you very much. I mean, there's a theme in all three of those stories, and the theme is really that the confidence trick is that the confidence trick in banking is that people believe they can get all of their money out, whether it's senior bonds, whether it's corporate treasurers, whether it's raise small company. They believe they can get it out any time they actually want, and then when it all collapses, that's when the confidence trick sort of disappears. The thing that I'll open it up to you in a second. The thing I just wanted to ask the three of you really is, how is it that these financial institutions, which you all know so well, how is it that they were able to create such trust? And it's a relevant question, because I bet we are now, all of us, with financial institutions that we think we can trust. How did they do it?
Should I go?
Please, Jared, yeah.
So in Iceland, I mean, the background for Iceland is that it was the poorest country in Europe for 1,000 years. And in fact, didn't really even have cash transactions until probably the 70s. Most people did not have money. Most people lived on farms, and they sent milk every few days to the dairy, and the dairy brought back some leather or something, and that was their economy.
That was in the 70s?
Yeah, my father-in-law was proudly telling me that story about the leather and the milk, which was in the 60s. So yeah, the people in the town maybe had some money, but a lot of people didn't have money.
That's quite a journey, isn't it, from milk exchange to that lot? Yeah.
So money is new there, the idea of money, and it's like magic. And these guys who were able to, for a few years, borrow money and grow their banks were seen as magicians, really. And they were flying on private jets, and they sort of created a Hollywood image of banking in this tiny country. And so that was, people were confident in them because they said, with these geniuses, they brought us prosperity. And yeah.
But how about the European bond investors? I mean, how did they?
Well, here's a thought experiment for you. Imagine if I went to Deutsche Bank and I said, I'm from a 300,000 person island, and our main exports are fish products, some tourism, and some energy. But we would like to be a banking powerhouse. But we're in the Caribbean. Do you think Deutsche Bank would have lent them any money? No, right? But in Iceland, because of the mythology of the Thule, of the Viking sagas, I think that was the reason that we were able to borrow.
So do you think there was something in that in the case of the Scottish institutions, the Scottish widows type of probity?
Yeah, I mean, I think a lot of these are very old institutions. Scottish Widows was founded in 1815, RBS 1727, Bank of Scotland 1695. And I think over centuries they had built up a reputation for being trusted. There'd been a few hiccups and ups and downs along the way, but over the centuries, these Scottish banks had built up a reputation for being relatively prudent, for being trustworthy, and not the kind of institution which would take crazy risks or necessarily rip off their customers. So that there was almost 300 years of reputational work had been done by the previous managements of these institutions, which ensured they were, fully trusted. I certainly didn't doubt the trustworthiness of RBS as a customer when I joined it in the mid-'80s. But I think that was really, but as soon as they took on a new generation of manager who was from outside banking, and RBS did that first in 1991 with a guy called George Mathewson, who became chief exec, that's when the thing changed, I think. That's when the attitude to the customer changed, and it became more like, how much money can we make out of you as a customer?
I absolutely get that, and when Ray said that HBOS had got a head of sales, my sort of ears pricked up, But so that's what's happening behind the scenes. But people are very, very slow to catch on. How do they, did people not think, well, they've got this swanky new headquarters, Fred Goodwin flies private jets, they sponsor every tournament. How does that work?
I think in Scotland, which is where I'm from, I think people looked up to that initially. They thought, wow, this bank's doing really well. You know, it's buying Citizens in the US, it's buying Charter One in the US, it's buying loads of other banks in the US, buying banks in Ireland. You know, this is a Scottish-based company which was taking over the world, you know, in the views of a lot of Edinburgh or Scottish people. So they should have seen through that and thought, this is, you know, this is too ostentatious. You know, there's something wrong here with this fountain outside the new headquarters and this private jet and all that. And actually, I've got a little anecdote on that if you've got time. Lord Younger, who was the chairman of RBS until 2001, and he was chairman at the time they bought NatWest. He was dying of cancer in a hospice near Stirling, Bridge of Allen, I think. And he was there with his daughter, Joanna Younger, who also worked for RBS, actually. And Fred Goodwin arrived to say hello to his ex-chairman. And he had two things with him. One was the picture of the new private jet, the Dassault Falcon 900E, which he had just bought. And the second thing was the plan of Gogabam, which is a campus-style head office built near Edinburgh Airport with about 3 or 4 different buildings and, you know, a main building, blah, blah, blah. And after Fred Goodwin had walked out of the room at the hospice, Lord Younger said to his daughter, Joanna, I think we better sell all our shares.
Yeah. Someone new. Just quickly on HBOS, right? I mean, the thing I wanted to ask, you have a chief executive who's had a career in retail, I think. You have a chairman who has a background in the media industry, I think, and head of sales who sold something other than financial products. Again, how do they get away with it with senior shareholders?
I mean, to a certain extent, we all contribute to the illusion because we all depend incredibly on banks. You know, you lose your bank card, you're lost for a couple of days until the bank replaces it or whatever. You know, there's practically nothing you can do without going through a bank. So it's in our interest to keep this illusion alive that the bank is a safe place for us to put our money.
So we participate in the illusion.
We are participating in the illusion. And I can expand on that in a minute. But to go back to your question, there's no doubt in my mind that certainly the chairman, Lord Stevenson, and the chief executive, the two, James Crosby first, followed by Andy Hornby, none of whom had experience in banking or any qualification in banking, they passionately believed they could pull this off. That they, just by their force of their personality, I mean, Andy Hornby got a first at Oxford and then his MBA at Harvard. He was first of 600 graduates in his year. He was a main board director of Asda at the age of 26 or something. You know, he joined HBOS at the age of 30. He just believed that he could do anything. As long as you gave enough effort, you put the real will behind selling. He sent messages every month to every branch. Keep smiling, keep selling. And they believed that they could do it.
And we believe they could do it. That's where I want to get into in the end. But we believed it.
And to a certain extent, it was in our interest.
It was in our interest. It's fascinating. I'm sure we could go on for the whole hour. But I'd love to hear what you think. I'd like to take questions 3 by 3 if we can. And we'll pass the microphone first question, second question, third question, and then we'll take them in bunches. Over to you. Let's just start on that in that corner there, and then 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 here, and then we'll work backwards.
This is a very quick one, but just an observation on why German banks or German investors would buy Icelandic bonds. Investors, debt investors, are very heavily influenced by the rating agencies.
Excellent. Very fantastic comment, actually. Thank you. Front row next.
Question for Ian. Do we know where Fred Goodwin is today? Has he been seen?
I get asked this.
We'll take it into, and then
Okay.
behind, please. Thank you. Oh, just the row in front. We'll come next bunch. Thank you.
Hi. I know with like Citibank, they've obviously nothing as bad as what you've been talking about, but they've made a few kind of like random blunders in the 90s. I think they did like the money supermarket thing,
Yep.
which didn't go super well, and then they've had I think apparently they have bad back office. They wired, I think it was like 700 million instead of 7 million in a transaction, but like one hedge fund like refused to give back the money, so they had to sue them. So where do you think it kind of goes from like maybe a few things happening but mostly fine to like kind of turning into disaster? And do you think there are any particular factors that are like the key?
Got it. Thank you very much. So quickly, you can
Fred.
answer quickly on Fred.
He still lives in Edinburgh. It's the same house. Yeah, I can tell you the address, but I probably shouldn't.
Don't dox him.
It's in a very nice area of Edinburgh called the Grange, and he is a bit of a recluse by all accounts, but he does still have two main pastimes, one of which is playing golf at a course in East Lothian called Archerfield Renaissance course, where the joining fee is 30,000. And he also shoots with a small band of close friends who are still loyal to him, and because he loves to shoot pheasants. Killing pheasants is one of the things he gets the most pleasure from, I've been told. But I haven't seen him. The last time I saw him was in 2008. I did try, when I was researching the BBC documentary, and when I was writing my book Shredded, I tried, but he didn't want to meet. He said his lawyers had advised him against it.
If I was Fred, I wouldn't go anywhere near a gun. But the ratings agencies, Gerald, please.
Yes, excellent point on the rating agencies. In fact, at the beginning of 2007, they increased their ratings of the three Icelandic banks to AAA, I believe, because they said that the Icelandic government, which had a AAA rating, would always be there to bail them out. not considering that they were maybe by that point maybe 9 times the size of GDP and going on their way to 11 times the size of GDP.
So the rating agencies were pretty useless.
Yeah.
And the reason they were pretty useless is that
They were taking in massive fees for doing it, and yeah.
After my book on HBOS came out in 2012, I was asked to speak at a conference in Dublin of things that don't really exist in Britain anymore, but are common all over Europe and elsewhere in the world. Community banks, post banks, savings banks. These are small banking people. And I gave this talk, and a man asked me afterwards, he said, was HBOS exposed to subprime debt in the US? And I said, not really, no. I mean, they lost 56 billion pounds, but only 7 billion of that was in subprime, and you can forgive them for that, I said, because they bought it as a defensive measure in their core equity. They bought what was known as Alt-A securities, which turned out to be subprime, and that 7 billion turned out to be worth 0. And the man that asked the question, who was chairman of the Belgian Post Bank, I think, said, didn't anybody go out and look at the underlying security for that 7 billion? And of course the answer to that is no, because it was rated AAA by the rating agencies, and so they just bought it without anybody going over and kicking the tires. And to the chairman of the Post Bank to lend money to something you had not actually physically looked at, especially £7 billion, was just unthinkable. And I think we have lost that, fundamental attitude to banking.
Well, there was there's no independent oversight then, and I'm not even sure there is now, because the ratings agencies are effectively in the pay of the financial institutions. The auditors rely heavily on the financial institutions. the investment analysts, particularly at the time, who are meant to be giving independent, clear-headed advice, are in cahoots with the investment banking departments. So actually, where is the hard-headed external analysis coming from? Probably should have been coming from the asset management industry, but where are they getting their advice from? It's all come piling in from those three conflicted parties. Do you think do you think the situation with the ratings agencies is any better now?
I haven't looked at it that closely, but there's certainly been no radical overhaul of the way they operate or the way they're funded. So if there is, it's been pretty superficial,
Yeah.
I think.
I would agree.
The last question, I'd just like to take myself, and you gave some examples of various blunders by Citigroup, and you asked if there was, I think, any kind of common theme, including administrative blunders, over-aggressive mergers and all the rest of it. The parallel I always draw, a bank I've written about a lot, is Barclays. And Barclays' model back in the 90s was Citigroup. What they really wanted to do was universal banking, where they did a bit of everything. And it's really interesting how Citi's problems with costly administrative error, reputational damage, risk damage, is almost matched kind of blow by Barclays. And it's a case of the management's ambitions extending way beyond their actual abilities. And where money is involved and where leverage is involved, it becomes incredibly dangerous. And that is the common theme that I would pick out. There were three more questions, so still on the left-hand side. We'll come back onto the right-hand side in a minute. Thanks.
A question, I think, for Ian, really. What do you think of the proposed retail offer of NatWest shares?
Thank you. Yes, and then there. Yeah.
So slightly on the Fred Goodwin line, but on Iceland, it's not far off the size of Hereford. What happened to the people involved there? Because it's not Edinburgh or Scotland where there's a bit more room to hide. I'm guessing everyone knows everyone. So what happened there? What are they doing with their lives now?
Great question, thank you.
And actually, Philip, I think you touched on the board question at the beginning. Something in Ian Martin's book about RBS is the failure to hold any of the wider board to account, and the way that Fred Goodwin was used as the lightning conductor, that all the wickedness was Fred's, not Matthewson's, who'd put him up to it, not the government, who'd rather encouraged it. And the board all went on to great and glorious careers elsewhere. I remember trying, a different story, but the iniquity of people who cost the taxpayer 40 billion being paid board-level salaries by public bodies still infuriates me. And I guess it was the same with HBOS. I mean, again, the focus was on the three big people, but there was, in principle, board oversight. How is it that the wider boards managed to get away with this?
Lovely. Thank you very much, Ivan. You're next. We'll just take you in the next group of three, if you wouldn't mind. So let's pick up these NatWest retail offer.
Oh yeah, they want to reincarnate Sid, and the talk is they want to do it fairly soon. But if I was a retail investor, I wouldn't want to play any part of that. I don't think it's going to be a particularly good investment necessarily. So my personal view is it's totally misguided. But I'm sure others think differently.
I think we don't give investment advice from this platform.
Well said.
But obviously, it usually depends on price.
Yeah.
What happened to the Icelanders?
Well, that's a great question. Thanks for that. So the big cases which I alluded to before were about the support of their and hiding of their own shares offshore and so on. Those cases resulted in convictions of all three CEOs and some of the top management around them. And they spent a handful of months in prison if they bothered to show up. And then some of them got ankle bracelets and they were walking around, and even one was flying, because he's a helicopter pilot as well, so he was flying foreign guests around Reykjavik when his helicopter crashed. And when he walked away, and nobody was hurt, but when he walked away from the crash scene, he was wearing an ankle monitor because he was. So not much happens to them. And in fact, the story that I tell, the reason I wrote the book is that the story, Russell Napier told me, you have to write this book, because the story was going to be lost. Because they have now tried to rewrite the story such that we had a great banking sector. Lehman Brothers took it down. That's the story now. And basically they kept most of their money offshore because they had earned tens or hundreds of millions during that time. And now they've been able to buy hotels, and so the country has been.
But they're not ostracized. They're not.
No, because they've rehabilitated, and people are forgiving there because you have to be in a small society, and they have been able to invest a lot in the tourism industry, which is the only industry left, really.
But I mean, it's interesting that because Iceland is often held up as a unique example of a country where senior bankers actually did jail time.
They did, for a month or so.
Whereas in the UK, as far as I know, the only bankers who served jail time were LIBOR traders. Sorry? LIBOR traders, who it seems to me were actually not doing much more than following instructions.
Yeah, there was one other set of people at HBOS. There were two senior bank managers or executives within Bank of Scotland corporate who were imprisoned for up to 10 years because they were overseeing
of the Reading fraud.
HBOS Reading fraud,
Okay.
which is one thing I, as a journalist, helped to expose. But I mean, your case is that you did actually you helped to get senior bankers into prison, including former chief executives of failed banks.
Yep.
But that in itself is an achievement. The fact they got out so quickly just seems odd. I mean, were they not jailed for longer?
They were the maximum. So
sentenced to longer terms.
unlike in the Anglo-American system, in Iceland and in many common civil law countries, you can't be charged with multiple counts of the same crime.
Okay.
So even though they did market manipulation every day for 1,000 days, they were charged with one count, and that carried a maximum sentence of 6 years. And some of them got like 4, but that really meant 1, and that really meant less. So, and some of them didn't even show up or they were waiting, they kind of delayed, and then they got the European Court of Human Rights to overturn, and then they never showed up for that.
Talking about people who didn't show up, let's take Ivan Sedgwick's question about the boards. Where were the boards when all this was going on?
The boards were nowhere. And the most distressing thing, worrying thing, is that they didn't know that they were nowhere. Just to answer your question earlier on, nothing happened to the main board or the most senior executives in HBOS. The only person fined by the FSA, but not under the criminal law, was the head of corporate lending. The chairman went on to be a fit and proper person under the Financial Services Regulation to run an investment company. The finance director became the chairman of the Yorkshire Building Society and did 2 terms there until he retired. So nothing happened to the board. There was a very good parliamentary inquiry under Mr. Tyree, I've forgotten his first name.
Andrew Tyree.
Andrew Tyree, who was then chair of the Commons Treasury Committee. It was an exceptionally good investigation. It was televised. As far as I remember, it's still on Parliament TV, and it's worth watching. But one of the interesting interrogations was over a man called...
Garrick?
No, Ron Garrick. Sir Ron Garrick. Sir Ron Garrick had been the chairman of a public company, an engineering company, and he was the senior independent director on the HBOS board. And he actually maintained it was the best board on which he had ever served. To which the chairman of the inquiry on that day said, "Then how did you get it so hopelessly wrong?" And he did not have an answer to that, because they had done everything that was required of them They ticked all the corporate boxes. They read all the 200 pages of papers at every board meeting. They always turned up for board meetings. None of them visited a branch. None of them went to speak to a customer to ask what was going on the shop floor. The board was absolutely nowhere and had no influence over the trajectory of the bank.
I think that actually has changed slightly now. I think that the law has tightened. There's more personal responsibility. I still talk to bank boards. They're still very, very reluctant to take any criticism of any sort. But I do sense that they've learned the lessons a bit from the past.
Can I say something about RBS? A board?
Yeah, well, I want to move on, but I think we've done boards,
Okay.
actually, if you wouldn't mind. You've been very patient there, and then the gentleman here, and then the lady back on against the wall. Thank you.
Thank you. One quick question. Where was the regulator in all of this? And perhaps more importantly, where should the regulator have been?
Thank you.
But also just a quick thought as well on the LIBOR traders. Tom Hayes actually has his appeal in the Court of Appeal, I think, next month. And there is some hope that there might be some justice there for him, finally.
That would be good. Sorry, this gentleman. Yep.
Just given the universality of bank failures across, large parts of the UK banking system, as well as, the US and other countries, is it fair to personalize the stories down to the individuals? Or is it more the responsibility of the regulators? And if it's the responsibility of the regulators, given in the two countries I mentioned, these are governments of the people, is it not just our responsibility?
It is.
Okay, thank you. And then the lady just before the door, that's it, yeah.
I think we're starting to touch on this, but could you just talk a little bit about risk, governance and solutions?
Yep, lovely, thanks. Regulator first, let's take that. Ian, we'll move along.
I mean, basically, from '97, which is when New Labour came to power, they had an agenda which was to reduce regulation in the UK. So with financial services regulation, they wanted light touch, limited touch, and allowed banks to do a lot of the work themselves or outsourced it to big four accountancy firms. So regulation became weaker, there's absolutely no doubt, especially prudential regulation. There was virtually none. But there were little instances where the FSA, as it was then called, had concerns. And the FSA made two requests with RBS at one point in about '04. One, could they interview each non-exec director separately to find out what was going on? And two, could they have an observer in board meetings because they were concerned about what was going on? Because there was a rift between the chairman, Mathewson, and the chief exec, Goodwin. But what happened after that was basically, I don't quite know exactly who the figures were, but one very senior from RBS visited a politician, possibly Brown, or probably Ed Balls, and said, what the effing hell is going on here? We are not going to allow you, the regulator, to sit in on our board meeting. Not you, the government. You've got to stop this regulator. We are not going to allow this regulator to sit in our board meetings. And what the effing hell are you playing at? We're not going to allow you to interview our non-exec directors on a one-to-one basis. So not you, we don't allow the regulator. So whoever that government figure was, and it was probably Brown or Balls, then went to the FSA and told them to get off the bank's back. So that was a classic example of the sort of thing that was going on.
Thanks, Jared.
Having been eased out of my first regulatory job and outright fired from my second one, I can tell you, and walked to the door and badge taken, I can tell you that there's absolutely, in my experience, no appetite for someone like me who actually wants to do the job, to actually wants to find a crime, go after it. There's just no appetite. And this comes to your point, the people are not demanding it. Because the people don't realize that when banks collapse, we're all going to pay the price. And so in a democratic society, people don't really seem to care about this. They think banking is happening somewhere else. And therefore, regulators don't get support to actually regulate.
keep the replies short now because I want to have another round of questions, so we've only got 3 minutes left. So would you just quickly talk about, the question was really whether this is a personal or a structural question, wasn't it really? Is responsibility personal or is it structural, if I have that right?
I think it is a personal thing. And I think to go after institutions without identifying the people who drove those institutions is a cop-out, frankly. There is no such thing as a badly managed company. It's people who manage it badly, or who manage it dishonestly, or who manage it delusionally. I think we have to identify the individuals and hold them to account.
Lovely, thank you. Your question about, let me just pick up where are we on solutions. I mean, the risk when you've been through a crisis like this is that you always fight the last war, and the next war is likely to be different. I mean, 2 observations on that. I'm not actually sure that we are even fighting the last war particularly effectively. There was a good 2 or 3 years, but we're sort of backing off it again.
Exactly.
But I mean, the next war is going to be in a different place, I suspect, and it's presumably going to be in the shadow banking sector, where banks are getting very good at offloading risk to third parties, usually to, often to asset managements, private equity people. That's probably where the next issue comes, maybe also the insurance sector. Let's have one more round of questions, please, if we may.
I think we might only have time for one, but
Okay.
unless they're really short.
Okay, that's, there's someone right behind you.
Hi, this is for Jared in particular. With the case of Iceland, since you mentioned how the board eventually was sort of forgiven ultimately, I just want to know, because as you said in the 70s, that's when money got introduced and that's when bankers were considered magicians. When all of this went down, how is it that a country with such a small population that could have been greatly affected by this, how were they able to still keep the trust, firstly, in that newly introduced system and in the banking system? Because in countries like America and the UK, even after 2008, there is still that grudge that still exists, but in Iceland it's sort of changed for a smaller country.
Just hold that for a second. We have a very quick comment from this gentleman here. Very, very quick one, and then we'll wrap up.
Yeah, and this again is for you, Jared, in Iceland. So I was reading, and this is fast forwarding to modern day, and just wondering if Iceland actually learned something from this last collapse. So I was reading an article, and the Prime Minister saying that they are trying to now build their own internal payment system, which will not rely on any outside banking rails, MasterCard, Visa, so that if there's an issue in the rest of the world, they will still be able to continue on.
Thank you very much.
Is that from that?
Jared, take both those in about 21, 20, 19, 18 seconds.
Sadly, one of the effects of 2008 in Iceland is that the social cohesion and the level of trust between people has broken down in a way, and it has not recovered. And I don't live there anymore, but a lot of my friends do, and family, and they tell me that. And last time I was there, I could see that. So that's. And the second thing is we had a very nice interbank payment system where, like, I could put money directly in your account. You just give me your national ID number, your kennitala, and which has your birthday embedded in it. There's no privacy in Iceland. Your birthday and your address and everything's public. Everyone can see that. So you just give me your ID number and your bank account number, and I can put money in there. So I think there's an attempt to expand that. Yeah.
Terrific, thank you very much. Well, the 4 of us have all written books on this subject, and at the beginning of the day, all 4 of us had books up for sale on there. Jared's have all sold out already, but Ray, Ian, and me, we've still got loads. Thank you very much for lovely questions and your attention. Thank you, panel, too. Thank you.